Welcome, Anders. It's time for our last update on this side of the new year. We had some big discussions yesterday with the Federal Reserve. What are your thoughts regarding the Federal Reserve's announcement yesterday?
So Fed cut the rates, but it was clearly a hawkish cut because the guidance was clearly more conservative. Federal Reserve raised the inflation outlook for 25. They also raised the projection for interest rates. So now they are signaling that we will only see 2 rate cuts in 2025. So the backdrop, I think, is the inflation numbers that we've seen during the autumn. We've had slightly high numbers in October and September and October. We've also seen a fairly strong labor market. So when the economy is running close to 3% in growth, unemployment is close to 4%. And when we're seeing at the same time inflation coming down more gradually towards 2%, it's fairly natural that Fed is in no hurry to cut the rates. And as Powell said yesterday at the press conference, the US economy is in great shape. So Fed will move slightly slower on rates. And I think it's too early to say if they will actually do 2 or 3 rate cuts next year, but it's pretty clear that the end point in this rate cutting cycle is going to be slightly higher than we expected before.
If we think about the outlook for the US economy going forward for 2025 and 2026, what are your thoughts there?
Well, I think the US economy is growing it at a very healthy pace. It's underpinned by a very strong productivity growth, close to 2%. So real wages are increasing again. We are seeing that unemployment has remained low and hiring has slowed a bit, but a lot of people are on the labor market. So consumption is supported by slightly lower rates, better real wages, and a fairly stable outlook for the labor market. So I think the US economy is firing in all cylinders. Consumption is strong, investments are high, labor market is strong. So very healthy economy with a very sound growth going into 25 and maybe even into 2026.
And what do these economic developments mean for Donald Trump, who will be taking the presidency starting now in January?
Well, it's too early to assess the impact from policy. It's clear that tariffs will raise inflation. I think the impact is going to be fairly moderate, particularly if there are trade deals done with Canada and Mexico, the 2 crucial countries. The impact on Europe on the inflation side is going to be muted. Potentially, we could see some deregulation that normally implies higher productivity and lower inflation. Potentially, we could see slightly higher energy production and maybe some tax cuts that could be beneficial for the stock market. But from an overall point of view, I really don't think that the policies will change the outlook for 25 and 26 that much. We have a very healthy economy. Inflation is gradually coming down. So on the overall perspective, I agree with Powell that the US economy is very healthy, and I don't think that the policies from Trump will really change that. The net effect from tariffs, deregulation, tax cuts, and energy is difficult to assess. It might even be a fairly small impact on inflation and growth.
If we turn to Europe and we're looking at the UK and France, how does this impact that?
Well, Europe is very soft. It'd be very surprising if we see Europe growing more than 1% in 2025. In the UK, the new government has implemented tax hikes, and some of the impact of that has already been seen in a more pessimistic outlook on the labor market. We might also see a bit of damage to investments. In France, there is an ongoing budget debate that is very difficult. Deficit has been very, very high for decades. And there is a clear political divide where it's difficult to implement a strong economic policy. So I think UK and France are going to be on the softer side. We have an election in February in Germany. There is a small potential that we could see a positive outcome and that we actually see some action taken to improve potential growth and implement some structural reforms. But Germany is very weak. The crisis after the removal of the Russian gas, the competitive pressure on the EV market from China, and underlying structural issues are pretty clear. And it doesn't help if the Trump administration implements tariffs on luxury cars. So Germany is, I think, the main scenario is also going to be very weak. But there is, I think, a bit of a potential that a coalition between the SDP and CDU actually will take some action to improve the economic outlook.
And turning to Sweden, we had Sweden's Riksbank decision now this morning. Where do you see this taking the Swedish economy?
Well, the Riksbank is cutting rates. It's pretty clear that inflation has already come down substantially. Compared to the US, the labor market in Sweden is much softer. We are also seeing a bit of impact from the high interest rates on consumption and growth. So the last 2 years have been fairly lackluster. So I think that the Riksbank can cut rates and continue to do that in the first half of 2025. In addition, we also have the expansionary fiscal policy, and the economy is also supported from the weak krona. So on the backdrop of that, I think Sweden will probably grow 2% next year and probably even stronger for 2026. So there is a recovery coming, but it is after 2 fairly lackluster years.
And then I guess turning to emerging markets, what do you see happening for emerging markets? Does this change anything going forward now?
Well, I think the probability that China continue grows in 25 is pretty good. Obviously, will be depending on the trade discussions with the US, but probably even more on the policies that China could implement. You really need to see aggressive rate cuts. The 2-year and the 10-year rates are still fairly high. We've seen a big move since November, but we need to see substantially lower interest rates, and that could bring a bit of a recovery to the housing market. Lower rates probably also will soften the RMB. So China will be very, very competitive. There might also even be some fiscal stimulus in China. So I think we could expect growth in China to be between 4% and 5% also in 2025. We are seeing India doing very well, and Southeast Asia is also in a strong position. So the economies of Asia is fairly likely to continue to grow at a fairly good pace in 2025. A more severe trade war could potentially be risky, but I do think that the main scenario for Asia is continually fairly strong growth, and that would, I think, give a strong underpinning for emerging market. And if you just remember that valuations on the stock markets in emerging markets are much lower, I think there is a case both in terms of growth and value for having an exposure to emerging markets.
Great. And one last question as we're heading into the next year, what is your outlook for equity markets, and what are the key factors that investors should be looking out for?
Well, I do think the US economy and US stock market has a strong underpinning. The fundamentals are good. There's also a bit of support from the spectacular growth numbers that the tech companies have delivered over the year. I think there is no reason to believe that revenue growth will slow down dramatically in 25. Profit margins are actually expanding between 24 and 25. So the outlook for the US stock market, I think, is fairly benign. And as we know, that's the biggest stock market in terms of market cap. So therefore, I think the backdrop for Europe and emerging markets are also fairly good. But I think Europe will be kind of lagging in terms of not only the slower growth, but also the fact that margins and sales in the companies haven't been that great, and the outlook for 25 is not spectacular. So I think we will continue to see the lead from the US. And as I said, on emerging markets, there you actually have a combination of valuation and growth that makes it as a very attractive complement to the advanced economies.
Thank you very much for that update. And I guess it's soon time for Christmas, and anyone who's looking for that last minute Christmas present, we know what that is. There's a great book available. So with that, I say Merry Christmas, and thanks to everyone.
Merry Christmas to you, and a Happy New Year to everyone. And let's hope that that's actually will ring out through for the whole of 25, that it is a happy and new year.
Of course.